From the land to Grant University in Urbana-Champaign, Illinois, this is the Closing Market Report. It is the first day of August 2025. I'm Extension's Todd Gleason. Coming up, we'll talk about the commodity markets with Mike Zuzolo. He's at globalcomresearch.com out of Atchison, Kansas. We'll hear from Carl Zuloff about the mission creep, which has come into crop insurance, and his fears as it's related to that program. And then we'll turn our attention to the weather forecast from Eric Snodgrass at Nutrient Ag Solutions and Daggerable on this Friday edition of the Closing Market Report from Illinois Public Media. It's public radio for the farming world.
Todd Gleason services are made available to WILL by University of Illinois Extension.
September corn today, 4 3/4 lower at 389 1/4. December at 410 1/2, down 3 1/4. And the March at 428, 2 1/2 lower. August soybeans 964 up 2 1/4. November at 988, a penny and a quarter lower. And the bean meal futures up $5.70. Couple of interesting things. Mike Zuzolo at globalcomresearch.com out of Atchison, Kansas, as we looked at the marketplace for the week that were very important. Tariffs announced by the president last night. August 1st has arrived, and there's also been a to-do involving nuclear submarines and Russia. Honestly, Mike, I thought the trade took both of those, particularly the tariffs, really well.
Yeah, I felt the same way. I mean, I think that, we can say, I think at this point, since it's August 1st, that we've dialed in a lot of what we got from the tariffs. Maybe the one surprise was President Trump moving more aggressively against India on Thursday. And it started really on Wednesday with Russia and moving ahead of the sanctions from 50 days to 10 days when he was on Air Force One. And I think this goes to your first point, is that we are moving more aggressively to, it looks like a standoff with Russia, Todd. And I think that is one of the things that's most puzzling about the crude oil market and the wheat market to a lesser degree as we closed out the week, because they both took a lot of premium off the table as we closed out the week. And geopolitically, especially given its Russian sanctions on energy and also financial sanctions, if you deal with Russia on energy and other commodities, you would have thought that the trade would have put some extra premium in these markets, especially with these nuclear subs being moved by the president. So that was an anomaly to me. The only thing that would help explain that is your second part about the tariffs, and that the fact that it's August 1st and we came in with a really bad employment number, not just for July jobs, but June was revised dramatically to the bad side, really offset the strong GDP number from earlier this week, and it sent the dollar sharply lower. And I think this, along with the tariffs in Wall Street, helped really break Wall Street down. And that would be the only thing I could think of that would help explain why both the dollar and the crude oil were sharply lower on Friday.
And Wall Street would look forward to September and October. Over the past 10 years have not been good. Historically, they've had tough times periodically, but have been down months. We're still a month away from that, but Wall Street always in the futures look forward, and I can't imagine they're not thinking about that, even if it's just historical context.
Yeah, I couldn't agree with you more on that. And so, my bottom line mindset after this week is Thursday was end of the month, Friday was end of the week. We had a very strong change in mindset, I think, by the funds on Thursday, unwinding the soybean corn price action, unwinding the feeder corn spread price action, and coming back in with quite a bit of price action that would suggest the funds were looking a lot better at the grain complex, because the trade situation and tariff deadlines we were right up against it. And so I really am surprised by Friday's trade, given the fact that we were so close to getting back above 395 on a weekly close in lead month corn. We actually got to 396 1/4 in the overnight markets. Weren't able to stay above even 390 though by the time we closed Friday's trade. So on a weekly chart, we had another week lower, whereas we were on Thursday working a higher weekly corn chart. 395 would have gotten us above the lows from 3 weeks ago. and that I think would have done a big bit of good. And what I'm really trying to say here is the key to me in the trade is consistency and momentum to shift the funds out of their positions. And I think we dabbled in it on Thursday and just kind of threw in the towel on Friday and went back to what we got used to most of the month of July.
And is that because there were so many things, some of it expected, I suppose, the tariffs that were happening today, and the trade came to realization after seeing the numbers in print from the White House?
Yeah, I think that. I mean, you could have said a million things almost as far as what happened on Friday to support this shift in trade. But I would also say that one thing that I saw on Thursday was the Paris corn market was up 5 to 7%. On Friday, it was down 5 to 7%. It's the August contract. It was getting ready to expire on the 5th of August. I want to say that this is just one of those weeks where it looks a lot like funds were positioning for a variety of reasons. And that one Paris corn move on Thursday, countered by Friday, drove a lot of the decision making. Meanwhile, the fundamentals continue to show Europe tightening in feed grain supplies, Russia tightening in feed grain supplies, Ukraine still looking at a significant drought, not maybe along the lines of 2012 because they did get some relief and some cooler temperatures, but it could become bad, very bad again in the coming 10 days. And so I'm going to hit the pause button when it comes to the analysis on Friday and just let things shake out over the weekend.
Yeah, so we'll watch that. And as you, relatively speaking, mentioned, I think I've been looking at the December contract. I think you were looking at the lead option, but a contract low in December made for corn a couple of weeks ago. And last week traded inside that range. It was an outside up week, too. And then, not last week, but the previous one. And then this week did not violate that contract low. Again, still inside the range from the previous when the contract low was made. So I guess we'll have to keep watching that. Is there a different story to be told in soybeans? Did they get weaker this week?
Yeah, soybeans made more sense to me fundamentally because I felt like it was a lot like August again of last year, late July, early August last year. And we had another piece of news on Friday that a Chinese buyer was going ahead and importing another 30,000 metric tons of Argentine soy meal. When you look at 9 straight days down in August soybeans, excluding Friday, we went essentially from 1037 to 960. We took 75 plus cents out of this market. I think the beans were catching up to the corn. And I think that makes sense because the crop conditions at the early part of the week improved so much for beans. The biggest thing goes back to the trade. I think the trade in hindsight was probably putting extra premium in beans, keeping extra premium in beans until we got another rain, and to see if we could get a phase 2 trade deal with China. And that didn't happen. And so I think a throw in the towel type mindset happened in the soy complex. That's the bad news. The good news is, even with that meal report of China buying, what was the leader to the upside on Friday? And that was this August soy meal up $6. And it had bounced off of major lows a couple times this week and really fought back hard. So that's going to be one of the starting points. $3.95 in corn, and did we make a real low in bean meal when we come back on Sunday, Monday?
We'll look forward to talking with you next week. Thanks much.
Thank you, Todd.
That's Mike Zuzolo. He's with GlobalComResearch.com out of Atchison, Kansas. Joined us on this Friday edition of the Closing Market Report that came to you from Illinois Public Media. It is public radio for the farming world. Don't forget that if you can stay with us for the second half hour, you'll hear our Commodity Week program. If not, it's up online right now, again, on the website, willag.org. I'm University of Illinois Extension's Todd Gleason. We're now joined by Carl Zuzolo. He's an emeritus agricultural economist from The Ohio State University. Carl, thank you for being with us. You've penned an article for the FarmDoc Daily website, and folks can find it at farmdocdaily.illinois.edu or on our home site for the radio station at willag, WILL, ag.org. The title is Crop Insurance 2025 Farm Bill and mission creep. Why did you do this?
The importance of looking, in my opinion, at mission creep in this context, in the context of the crop insurance industry, is that mission creep has led to a bigger footprint, yes, but it's also led to, or it is in the process of leading to, a fundamental change in, I think, the way farmers will use crop insurance. It started out as yield insurance, as I've already noted, and at the individual farm. But once you get to coverage levels above 75%, you start to move into the range where price becomes much more of a factor. For example, if you just take the U.S. insurance prices, that is the change from the projected price before harvest to the harvest price, and you use declines of 25%, which would be equivalent to a 75% coverage level. And we can do this quite easily for corn, upland cotton, grain, sorghum, and soybeans. The highest number of years since 1973 that you've had a 25% decline in the insurance price is 8%. So at the 75% coverage level, there's very little coverage of price decline. Prices rarely drop that much over the growing season. At 95%, which is the highest coverage level right now, and that's for ECO, the enhanced coverage option, it's about 50% of the year's price declines by at least 5% between the projected price and the price at harvest. That makes insurance, even though they don't insure price directly, they insure it through revenue. But that makes insurance a really potentially useful product from the farmer's perspective for managing price risk, at least over the growing season. So this is a very important shift from managing yield to managing price, using it to also manage price over the growing season. And that's where mission creep becomes really important. Because it's changing the nature of what the product does or can do.
What does that mean for two sets of growers? As we know, about 15% use the CME group in some form, and the others only market cash. Does that mean that those cash marketers are more likely to go ahead and market a crop during that growing season?
I don't think we will know. This can go several ways, Todd. Okay, and I don't think it's hard for me to figure out right now what way it's going to go. Okay, I think that one of the things that will happen is that will be worth keeping your eye on is what does the private risk management sector, which is the forward contracting sector in part, what do they do in response to what has happened literally in the last 3 or 4 years, Todd, where the government, either through Congress or through the administration, has raised the subsidy rate for these products that have higher coverage levels, and they've raised the coverage level themselves in the case of ECO. So this is something that really is just starting to percolate through farmers' thinking. And it does, how will they use this to manage the price risk? How will they use this to manage the yield risk and the revenue risk? It's going to be interesting to see, and then it's going to be interesting to watch how the private sector reacts to these products being available. What will they do for forward contracting? How will they wrap it around insurance? Maybe that's one way they'll do it. Okay. And so I think we're in a period where farmers have an option to manage price risk that they've not had. It's always difficult to forecast how the private market will react to something that really hasn't had before, Todd. Okay. So I'm not trying to avoid your question. I just think it's a difficult one to answer right now.
Anything else before I let you go?
I think it's something to really watch, and I think it's. I've been talking to farmers about this. I would note that this may be just coincidence, but I'm not I would be willing to bet that it probably is not. But if we look at the early pattern of buying for the 2025 crop, what farmers bought this year versus what they bought in 2024. The ECO subsidy level was raised to 65% last summer. This would be the first year that subsidy rate would be available and therefore would lower the cost of ECO to farmers. The use of ECO has almost tripled this year versus last year across a wide variety of crops. That's a pretty high adoption rate, and suggests that the use of area add-up insurance is going to be a factor going forward, whereas it's been a relatively minimal share of the market. And that's consistent with farmers seeing value, but it's also consistent with the notion that they may be seeing it as a way to manage price risk. We'll have to wait and see on that one. It's a hypothesis.
Indeed. Thank you very much. I appreciate it.
Thank you very much, Todd.
Carl Zuzolo is an agricultural economist emeritus from the Ohio State University. Let's check the weather forecast across the Corn Belt now. Eric Snodgrass is here. Hi, Eric. I usually don't just say we're doing the Corn Belt, but today that's where I'd like to stick. Let's start with July. It was a warm month, well above average, I think, for temperatures. Can you give me a quick recap? And then particularly, we might want to go back and take a look at those last few days where we were hot, too.
Yeah, statistically, this is going to come in as like a top 30 warmest July. So, I mean, as hot as it was, we've had hotter, so it's just, it's all relative. The hottest spots were down in the southeastern United States. In fact, I was down there earlier this week, and I'll tell you something. My son and I on Tuesday had a chance to go to the beach in the afternoon after all the work was done, and took my my flip flops off and only had to move about 50 yards to get to the water. And in that short amount of time, given how hot and intense the air and the atmosphere, the sun was, our feet blistered. We got burned on our feet by the sand. So there are places that were hotter. I think the big thing for us, Todd, is how warm the overnight lows were for much of the end of June and July. And you and I have been talking the last couple of weeks about some of the pollination issues that could be there. But when you balance that against how much rain we saw, I mean, multiple clusters of storms. A derecho event that happened on Monday that came through parts of Minnesota, out of South Dakota into Iowa. Although damage is, I think, right now sparing across major corn acres and soybean acres, but the reality is the atmosphere's been open for rain, and it's made a lot of rainfall during that very warm time period. So it was hot and it was humid. But again, that comes back to the warm overnight lows. It's going to be nice to finally get some drier, cooler air in this weekend, although we're dealing with a lot of wildfire smoke from the fires in Canada, but also a couple of large fires in Utah and Arizona. So yes, July is going to go down as a hot, stormy July, and we have yet to kind of see if we had any major negative impacts on yield. But Todd, bigger picture, from satellite, NDVI values are still record high across the Corn Belt. So hot, stormy sometimes gets the job done.
Now, I thought about opening the windows last night because we went into the mid-50s. However, I checked before I did that to see how humid it was going to be, and it remained humid overnight. Are we going to lose that humidity, do you think?
We will temporarily, which is going to be nice. But like I said, we're trading humidity and heat for really smoky skies. And, my wife texts me, she goes, "How long is it going to be smoky?" I'm like, "The whole weekend." And she immediately thumbs down to my response. I'm like, hey, there you go. Even my wife doesn't approve of my forecast, but no, it's going to be with us through the weekend. And those fires in Canada, don't forget, they've been going for some of them for 3 months. And it's been quite a smoky summer across the upper Midwest.
It did make for a beautiful golden hour last night, I must admit. It was
Yeah.
Gorgeous. Yeah, that's one of the things that happens, right?
That is right. Yeah. Red sunsets when you get that much smoke.
So tell me about the next week and what you think August will look like.
Yeah, we are going to come back into some warmer temperatures. So enjoy this weekend. It will warm back up. We're overall, I mean, to be honest with you, we're in a bit of a drier forecast, which that's not bad. But there's still, the atmosphere does not want to give up its chances for storming. And so I would say this about the month of August. I think we're started off cool. It's cool today. We will build back in some heat pretty soon. But remember, our peak heating month, that's our peak month for heat, I should say, is July. So hot in August is a shade different than hot in July. It's a little bit, on the cooler side of historical averages. So long story short, the big question will be, are we able just to keep the moisture rolling, which I think we do, because beans could use probably 2 more good drinks before we get into September. And I'm not shutting off the rainfall just yet. So we do expect to get some moisture back into this system. But I'll tell you this, there is some confusing stuff about late August that we're trying to sort out. And a lot of that has to do with the tropics.
Tell me about it.
Yeah. So we've had a relatively benign hurricane season so far, right? I mean, it technically starts on June 1st. August, it should really be ramping up with big systems that form out in the middle of the Atlantic. But we've got a lot of warm water. What we don't have is the instability, and what we don't have is, the juicy air down there. Yeah, believe it or not, even though it's been the source of our high humidity air. Compared to normal, the tropics could use a bit more moisture. So long story short, I don't have any reason to tell you that we've got any big systems coming in the next week. And which means we're going to get through a lot of August, I think, with a relatively capped, start to the hurricane season. So watch out for the back half of the hurricane season, as we, typically think it's going to be loaded back half this year, given the way it started. And don't forget, Todd, we've had 51 different tropical cyclones throughout history, at least what we've been recording of it, that have come through Illinois. So we can get some late season moisture out of an active tropical season. And maybe the Gulf will be open for business once we get there into the month of September.
One final note, since you talked about September, are you still expecting an early planting season for farmers in Brazil?
Yeah, it was funny. Matt Bennett and I were talking about this yesterday, and he prefaced the question with, well, the models say it's going to be wet in October. And if they get wet early in October, they just go like mad. And he said, what's the chances of the models being wrong? And I'm like, Matt, that's a loaded question, because you know how terrible the models were for summer, right? I mean, they blew it. They all predicted major drought in the Midwest all summer long, and none of that ever happened. And I said, well, Matt, right now I see the models going over wet early. And he goes, is there a chance it could be too wet down in Brazil? And I said, yeah, always. So we have to balance that out for South America. If they get a just normal start to their monsoon, they will put in huge acres. The crop counter will be opened up wide. But if it's too wet or too dry, one of those, we can compress their crop counter. So I'm just going to say this. The model looks generous, okay? But the models have been terrible. So let's watch that carefully together.
All right, thanks much. We appreciate it. Eric Snodgrass is with Nutrien Ag Solutions in Daggerville. Speaking of Matt, if you can stay with us on our home station, you'll hear him on Commodity Week along with Ellen Dearden and Logan Kimmel. If not, it's up online right now at willag.org, and many of these radio stations will carry it over the weekend. You've been listening to the Closing Market Report from Illinois Public Media, online at willag.org. I'm Todd Gleason.